Hey guys, how's it going? Welcome to another episode of Simple Business Stewardship. My name is Lauren Rilling. Thank you so much for being here today. If you're joining us live, I would love to say hi to you. So please chat, add your name in the chat, say hello. Sometimes the chat in LinkedIn comes through as LinkedIn user. So if you could say hi, this is, whatever your name is, that way I could say hello. And if you have questions or you want to add your 2 cents, your commentary, that is amazing. I would love that. This is supposed to be interactive, not just me talking at you. So, yeah, love the interaction, and it's great to see you today. We're going to keep it pretty short today, short and sweet, but this is going to be packed with value. So let's dive right in. We're talking about the 3 expenses you have to pay attention to in 2023 if you want to be profitable and thriving. So let's dive right in. The first one is this. It's your payroll. This is your largest expense unless you are a product-based business and you have a lot of COGS, then payroll. But payroll is big for any company. And there's good reason for this. Hey, Dan, thanks so much for being here. It's great to see you. Hope you're having a great day today. Payroll is huge. Now, I'm not mad about payroll being your biggest expense. We should want to pay our team well. We should want to attract top talent. We should want people to thrive, and we should be proud of creating businesses and creating job opportunities. So it is not a bad thing that payroll is your biggest expense. And at the same time, because it's your biggest expense and because it is a significant expense, we want to steward that well. We want to make sure that we're getting maximum ROI, that we can not only justify but really be really make sure that the payroll amount makes sense, that it makes sense in that it's in line with your revenue, with your profitability. These numbers have to work, and that's not a selfish thing. It's an economic reality, because if the numbers don't work, then you end up having to lay people off or cut people's salaries, and you don't want to be in that position. That's really nuclear options. So when I say we have to pay attention to payroll, I am not at all suggesting that the answer, if you notice that your payroll is like too high, the first reaction should not be slash that budget, like just take a machete to it and just cut it in half. And at the same time, if that becomes necessary, then it's necessary, but that's not the first thing we look to. So ways that you can pay attention to that expense. Here's what I'm talking about. I'm talking about making sure that you have a healthy team, that you have a healthy company culture. We talk a lot about productivity and ROI, and that can feel like almost robotic. Like people are almost just these robots. They're just a measure of economic, we're just measuring their economic output, and that's all there is to it. And it's really so much more than that. I was having a conversation with a friend who shared, and I think this really captures how a lot of people feel, that companies don't really look at the whole person. Amazon, they don't look at the whole person. They just want to know what you're producing, and that is really at odds with showing the kind of stewardship and care for people that Christ has called us to. Now, I would argue that while some companies do this, that just because you are concerned with driving your bottom line and with profitability, and that you are tracking ROI on payroll and economic output, those are some of the metrics. They're not all of them. So yes, they're important. And I would say that if you're doing a good job of taking care of your team, of stewarding those relationships, of stewarding those responsibilities as a leader, that you're actually going to see a positive effect on your financial numbers. So I want you to start thinking of that profit loss statement. It's sort of like getting, when you go to the doctor and you get blood work done, you get a CBC, complete blood count, and you see all these numbers there. And it's like, some of them you might be familiar with, and some of them are kind of like, I don't know what that is, right? And then your doctor comes in and tells you, okay, this is what those numbers mean. This is what the numbers are telling us. You may or may not get an actual like diagnosis from, okay, this number directly means you have this disease or something, but they're indicators, right? And so then that gives us the information that we need to dive deeper and figure out if there's a problem, what's going on? How can we bring those numbers to healthy numbers? And what effect is that going to have on the health of your business? That's what we're talking about when we're looking at something like the payroll expense. So we want to make sure that they're healthy. And if it's not, then there's probably the reason for that might not have to do with anything financial. We might need to dig a little deeper and figure out what's going on in the team. So if there's a lack of productivity, the answer is not to go to your team and tell them that they're terrible and that they need to be more productive and the person with the lowest numbers is getting fired at the end of the month, right? The answer is to look at what's going on in the ecosystem of the team and to figure out what can we do to make this a better place to work so that people are, and I'm not talking about like putting in like ping pong tables and making we're not trying to transform this into Twitter here, okay? We're trying to create a company culture where people can thrive and do their best work. And those things go hand in hand with profit. So Patrick Lencioni wrote the book, The 5 Dysfunctions of a Team. I would say he's my favorite, foremost expert on teams, emotional intelligence, people's working geniuses, all of those things. So read The 5 Dysfunctions of a Team. I'll share with you just real briefly. I have some notes here so I don't get off track, what those things are. But he talks about the 5 dysfunctions. So they are absence of trust, fear of conflict, lack of commitment, avoidance of accountability, inattention to results. So yeah, we have a connection to results, but we don't only live in the land of results. There's a lot more to it than that. This reminds me of a time when I was an employee, and I will not say the name of where I was an employee, but there had been some issues. And this was the first meeting of the year, all hands meeting. And the leader of the organization says, you know, we've noticed there's a real lack of trust here. And so you, the team, you just need to trust us. So I found that hit me weird. Like I thought, you know, I think there's something not quite right about this. I was 26 years old. Like there's something not quite right about this. I can't quite put my finger on it, but I don't feel like that was the right way to solve this challenge of there's a lack of trust. So therefore you just need to trust us. So Patrick Lencioni deep dives into that, what a lack of trust does, how to solve that. And it really does start with leadership. It starts with modeling and becoming trustworthy. So we can look at, this is the cool thing about business finance from my perspective, is we can look at numbers and we can use that as our indicators of, hey, this is something to explore. And probably 90% of the time, do you know what it boils down to? It boils down to personal development. It boils down to personal growth. It boils down to that idea of taking extreme ownership and figuring out, what can I do? I had a friend ask me this yesterday. What can you do right now? Like what's in your control? What can you do right now to take one small step forward? Don't try to do all the things, but what can you do right now to take one small step forward? And so much of the time that just has to do with personal decisions, personal growth, personal mindset shifts. And that will enable you to model and be that leader for your team that will then show up differently and in a better way on your profit loss. So that's what I mean when I say pay attention to your payroll. All right. Now, the second expense that you really got to pay attention to in 2023 is this. It's your taxes. Now, I know that taxes, we don't think of taxes as a business expense, but it is money that you have to pay. So yeah, I'm going to say it's a business expense in that sense. Okay. You should not have any surprises in April. There's no reason to. How great would that be, right? If you feel like, man, I don't know what my tax liability is going to be every year when I file taxes, guess what? You can take the surprise element out of it. That's a possible thing to do. Maybe not to the penny, but like really, really close. This should not be a stressful event for anybody. It might be annoying. I'll give you that. That's fair. I'm annoyed. I don't do my own taxes. Like I have someone else do them for me because I don't like doing taxes. But thankfully, there are tax pros who really love it and they thrive serving in that way. And God bless them. So, all that to say, you should plan every month for how much you need to set aside for taxes. And if you don't know how to do that, reach out. I can help you with that business budget. I have my team. I've got people who are amazing at the tax stuff, and we can help you make sure that you're setting aside the right amount every month for taxes to pay quarterly, to just take care of it without any stress. And then the other side of it, though, is that you don't want to pay more than what you need to pay. So there is something that most companies are missing, and that is called having an accountable plan. And that is basically a list that says, this is what we can deduct, this is what we can get reimbursed for, this is what we can't. And it creates clarity. So one of the things that happens a lot, actually, that's my third. So I'm going to keep that a surprise. So you got to hang with me for a few more minutes. We'll talk about an accountable plan and why that's so important. But having an accountable plan, make sure that you get all of those deductions that you should be getting, but that you're not overstepping and taking too many things and then you end up with problems. So it creates clarity and make sure that you can get all your tax deductions. The other thing when it comes to taxes is that you want to minimize liability in context of your personal goals and your business goals. This is something I harp on a lot. So if you've heard me say this before, I might be beating a dead horse, but I know there's someone out there who's just hearing this for the first time. So I'm going to keep saying it. You don't want to just try to minimize your tax liability in a vacuum. So if your CPA says, yeah, if you want to pay less in taxes next year and it's November or December, I know we're in January, but go back with me a couple months, go ahead and buy that $80,000 truck, because that way it depreciates. You can write off this much, Okay, so you're going to pay less in taxes. Well, you're not going to pay $80,000 less in taxes. You're still paying for the truck. You're going to get a percentage of that you don't have to pay in taxes. So the way that I like to think of tax deductions, I like to think of it as getting a discount on things. Like if I have a legitimate business expense, you can't just write off your car, by the way. Like if you work from home, you can't just say this is a business vehicle, even though you don't use it for business. So if you own a landscaping company and you actually need a truck, my next door neighbor owns a landscaping company, which is why that example constantly comes to mind. And they're amazing. So if you live in Colorado and you need a landscaping company, let me know and I can give you a great referral. But I digress. So you buy this truck, right? But let's say you didn't really need it. Like you have a truck that works, you spend $80K on a truck, and then you get to depreciate that, whatever. That's great. But I like to look at it as getting a discount. So if I'm going to save 30% overall, then I would just calculate $80,000 minus 30%. And I would look at that as the net cost of the truck instead of looking at how much money I'm saving on taxes. Okay. That's how I like to look at it, because you're still paying for it. It's still an expense. You're just getting a little discount because it's tax deductible. So yes, get all the tax deductions you can on business expenses that you actually need, but don't overpay for business expenses just to get the tax deduction. When it comes to getting tax deductions, there are so many other things that you can do other than run up expenses, like setting up a SEP or a 401k in your business. This is one of the ways that you can compensate yourself. If you have retirement goals, which hopefully everybody does, because there will be a day where either you don't want to work anymore or you will be physically unable to. So you need to be planning for retirement. Retirement can look however you want it to look. Doesn't mean you have to sit and play golf all day or sit on the couch or whatever. But everyone needs to be planning for retirement. So if you don't have a SEP or a 401k, some sort of retirement plan as a part of your business structure, that is a really amazing thing to get in place because you can save money on taxes. You can contribute to that tax-free. The business can contribute to that, and you can get a tax deduction. So that is a win-win. That's more ways to protect your income rather than, and this is what I see a lot, taking a large distribution and then opening up a brokerage account and being like, I'm investing. Yeah, that's great, but you are doing it in the least tax efficient way possible. And that costs you thousands and thousands of dollars every year. And so give yourself free money by having a retirement plan as part of your tax strategy, right? This is how we align our personal goals with the business and with the tax strategy. You've got to create alignment here. You can't do this piecemeal. So that's a big thing. Okay. And then that leads me to the third and final thing that you have to pay attention to, which is paying attention to what you are expensing in your business, but counting it as an owner benefit. The reason that I put this as the third is business owners have been able to kind of get away with stuff for a while. And the government is really not excited about that. They're really wanting to, they're adding on more requirements, more reporting requirements. I was just talking to my tax advisor today, which inspired this third point. I wanted to share it with you to just make you aware so that you can take the appropriate steps that you need to take. The IRS is adding reporting requirements. They're adding, what does that look like? It looks like on a Schedule C, you have to answer more questions. You have to do more detailed reporting on your tax return. Yay, as though these things weren't already long enough. Again, this is why I don't do it myself, but I digress. The IRS is hiring like 72,000 more agents, and their budget is being increased by about $8 billion. Why? So that they can track what small business owners are doing. Whatever you think about that, that's the reality. So you need an accountable plan for compliance purposes, for clarity, to minimize your risk of an audit. And if an audit were to happen, you've got everything is clean, everything's good, right? But business owners have been, I don't like to say getting away with, but it kind of is. Like it's easy to right now, or in the past, it's been easy to simply say, okay, here's, I got my, I never get my nails done, you guys. This is my nails. But I got my nails done and I had to give a presentation. And so I'm counting that as a business expense. I'm just going to pay for it out of the business account and I can deduct that. Well, guess what? You really can't. So, there's those little extra things that you're like, well, the business can pay for this or that, even though it's really a personal expense. Yeah. Prepare for a crackdown. Okay. You can't do that anymore. That's why you really need this accountable plan, that list that creates clarity on what is, expensable, what's reimbursable, what's not. So make sure that your business expenses or what comes out of your business account or gets paid from your business account truly is a business expense. Okay. Again, I want you to get every single tax deduction that you can. I also don't want you to get in trouble with the IRS. I also don't want you to find out that, oh, I did things wrong and now I have a mess and I owe penalties or more in taxes than I wanted to. So payroll, taxes, and paying attention to owner benefits, what you're counting as a business expense versus what really should be coming out of your own personal budget from your own personal bank account. Those are the top, I would say the top three things that if you don't have working like a well-oiled machine right now is the time. This is the time. This is the time to get your business finances organized, the time to know what's going on with your profit. There are so many things, as I'm sure you're feeling as a small business owner, there are so many economic changes. I was just chatting with someone today about how being unconventional is a good thing. Like traditional marketing, funneling, impersonal stuff, that's really kind of out the window. But the reason I say this is because we feel these economic changes as business owners, and then stuff shows up on the news, right? And we're like, yeah, that kind of makes sense. I've been experiencing that. But remember that An economic climate is a context, not your destiny. And so, yes, we want to take these things into account. If your revenue is down, if your expenses are up, if you're feeling those pressures of economic challenges, that's okay. There's going to be economic cycles, there's going to be things that are out of our control. But the thing about entrepreneurs is we have to be able to adapt, we have to be able to change course, and we have to be able to keep going even when we face challenges, even when we face failure. And so if you're feeling like, man, my business finances, I don't know, they're not where they need to be, but I'm too overwhelmed. I don't know where to start. Or I've got really big goals and I think we're doing okay. Our books are in order. So like that's all good, but I don't really know where we can go from here strategically. How do we grow? How do we improve our margins in the face of these challenges? That's what I'm here to help with. So reach out. I'm a CFO for small business owners, and we're gonna align the business finances with your personal goals, with what you we want to have a life that we envision, right? There's reasons that we don't want to just have a regular old job. We want a certain lifestyle. We want a certain freedom and flexibility to do the things that God's called us to do. And we want to run a profitable business. We want to steward it well. We want to steward our finances for the glory of God. So let's commit to that in 2023. Pay attention to these 3 key expenses and reach out if I can be of service to you. All right, you guys, have a wonderful rest of your day, and I'll see you next week.